Hi, everyone. I'm Michael McCormick. I'm the chair of the National Council of Firefighter Credit Unions, and I have the distinct pleasure of talking with the CEO of Denver, Mike Kerr, and maybe he can tell us a little bit about what the Denver Firefighter Credit Union is all about.
Sure. Hi, everybody. Michael, thanks. Excited to be on here with you today. So Dept FCU, we've been in business over 83 years. We're 190 million in assets. We only have one branch, and we operate that one branch with 13 employees. And one of the unique things about us is we're still a private membership. We serve paid professional firefighters throughout the state of Colorado, and their immediate family members only. And that's something that served us really well. So that's a little bit about who we are. What else you got for me?
Well, I know that you said you had a couple of employees that tested positive for the pandemic, and the pandemic's on everybody's mind and has certainly affected operations at all of our credit unions. So maybe you could talk a little bit about how it's affected Denver in particular.
Sure. Yeah. Well, most importantly, we've been really fortunate that our employees who have tested positive are healthy and going strong now. We still have two out right now recovering, but we're glad they're okay and really excited to get them back. We had talked about this a little bit earlier. I really believe the pandemic has strengthened our credit union. Our digital use, our mobile app, digital banking, and remote deposit capture is up over 20% this year because of that pandemic. We were able to remain open. So since we do not have a drive-through and we do not have any ATMs, and we have that single branch location, we've remained open throughout the pandemic. And that has actually helped us with our membership growth. We've had members from larger banks and credit unions who maybe used us slightly or just knew a little bit about us that have come over and actually used us as their full financial institution due to some of the problems that some of our bigger competitors were having. I think another big thing for us was our organization is a lot better at communicating now. We've had 75% of our workforce out since March. And what I mean by out is working remotely. And because of that, we assume a lot less and communicate a lot more. And so when all of us were in here together, we may not have taken the time to double check with somebody else what we were doing or whether we followed up with that member. And with people working from home sometimes and being in here sometimes, jump on the Microsoft Office platform has been huge for us. We have weekly video updates that we utilize now too, but we've really become better at communicating with ourselves, and we've decreased member complaints regarding follow-up and regarding passing member problems between employees significantly this year. So I guess one last thing, and I don't mean to blab too much, is due to the pandemic, we actually had members who were a little uncomfortable coming out during the week. So we started Saturday hours just because of the pandemic. And that's been something our membership has really utilized and enjoyed. So it's worked well for us so far. And while nobody wanted this to happen, we really think we're stronger because of it.
Well, Mike, that's really kind of interesting. There's a couple things I want to follow up on. One, I love how you've really grown your digital presence, because I know, like at San Diego Fire Credit Union, we're one branch serving a county that's huge, and we need to have people move to the digital platform if we want to serve them. I mean, and get them to think that really our branches at their laptop, wherever their laptop or their phone is. And I love how you guys have really worked hard to enhance that and get your members to even give. Part of the things first members try, like the mobile deposit capture.
Mm-hmm.
I started loving checks again. I mean, it's so easy. It's actually better than cash. Someone wanted to give me several $100 in cash or something. I saw, I go, can't you give me a check? We just don't use cash anymore. Oh my God. And then I love how complaints have gone down because there's more follow-up, because people you don't see them, you want to make sure. And so I think that's a great learning, huh?
Yeah, we sure didn't see that coming, but it's our team has just done such a good job of realizing that we're not all here able to talk with each other in that immediate moment, and it's really helped us.
And so you've never had any issues with people coming into the branch? Everyone follows the mask protocols, and no one's come in with any obvious symptoms or anything like that?
Well, we're talking firefighters here, so
Okay, just
we
that's
have
what
some
I thought.
opinionated members, right? No, what we did is we let our membership know right away that since we have a single branch, it's extremely important for us to protect our employees and our members. So our members were allowed to go into the building and even the foyer to the building and to our actual financial center without a mask if that's their choice. But there was a certain point where they had to stop and not go back into any offices to ensure everybody's safety. And other than a few opinions, our members have been really good about protecting our team members and understanding that if we had a widespread outbreak here, we'd have to completely shut down. We don't have, the 4, 8, 9, 10 branches somewhere else. So it's worked well.
And I know that's a relatively new branch. I visited Mark Lau the first time I don't know, about 10 years ago at the old branch. And I'm curious, did any physical alterations like a walk-up window or a drive-up platform or anything like that because of the pandemic you're thinking about?
No, we discussed that at first, but we quite honestly felt that anything like that would deter from the family, we know you because we're a private financial institution message that we've sent out for years. So we didn't do that. And our members have been, to be honest, really good about understanding that a member may be in front of them providing an account number that's personal information. And so they're standing back a little further out of the lobby or sitting and talking with somebody in a room that we created that they could stand off to the side and wait. So no complaints there.
Oh, great. So now I'm going to let you brag a little more. I know that a national survey of over 10,000 banks and credit unions listed Denver Firefighters as the healthiest credit union in America. So maybe you can share a little bit of your secret sauce with the other members of our council.
Sure.
How'd you get there?
Well, first of all, you flag me down if I get yapping too much about this. But yeah, you're talking about the depositaccounts.com. What do I want to say? Their indicator that they come out with, and they're a subsidiary of LendingTree. So they use something called a Texas ratio indicator that evaluates the capital of a financial institution and how much capital they have compared to the total value of loans that are considered at risk at that institution. And with us, we have little to no delinquency. We have a significant equity position in all of our real estate holdings, and to be quite honest, all of our collateral holdings. We're always overfunded in allowance, so we ended up with a 0% Texas ratio. They combine that ratio with consistent deposit growth, which we just have such a great membership, and we always strive to be one of the leaders as far as rates we're paying in our particular market. That consistent deposit growth and capital position really helped made us what they considered the healthiest credit union. And it wasn't just this last year, it's actually been 2 out of the last 3 years. So it's pretty cool. We had talked about how do you do it? And here, I'll try not to get too wordy, but I'll tell you a few things in our secret sauce or special sauce. The first thing is, for over 83 years, we value safety and soundness, second only to service. So for example, growth is important to any business, but it's not important to us if it's at the expense of safety and soundness. Same with making a profit. Everybody needs to make a profit, but not at the expense of safety and soundness. And you had mentioned Mark Lau, who we got to make sure we get a copy of this to him. But our prior CEO, Mark Lau, and our volunteer leadership team several years back noticed that ever-growing separation of success between the haves and the have-nots in our industry, right? So the $500 billion credit unions compared to credit unions with less assets. And there are economies of scale and there are efficiencies of scale that really can't be reproduced at a smaller size like us. But what Mark and our volunteer leadership team determined is we can create a business model that closely mirrors some of what the haves are doing. And for the sake of not talking forever, one of the first things we looked at, or one of the first things that jumped out to us, was the operating expense to average assets ratio. And it's really kind of funny. At that time, I was actually running another credit union, a $70 million credit union here in Colorado, and looking at similar things. And Mark Lau and I were able to have a lot of discussions about this. But what we found was those larger credit unions have operating expense ratios at 2% or under consistently, right? Whereas credit unions like our size are operating at 3.5 to sometimes even a 5% expense ratio. And as we all know, that higher expense ratio is really gonna hurt you as far as income positions, growing capital, and being able to use that capital to enhance member services. So what Mark and our volunteer leadership team did, and it's now been, well, I'd say probably 16, 17 years, is we created a business model where, for instance, we have a real service bureau relationship with Fiserv. We outsource our IT, we outsource our plastics, we outsource our quality control functions. So instead of having to have 2 or 3 members in a plastics team here, Fiserv does that for us. And instead of the 2 or 3 people that we have to schedule around, work around, and also pay salaries and benefits to, they have 15, 20 people that are experts in all different aspects of plastics. And we found that reducing those expenses through having less employees, I'd said earlier, we run with 13, where a typical credit union our size is running above 20, sometimes around 30. We found that helps keep that expense ratio in line and helps give us that extra income to increase our capital, enhance our member services. And another thing we do that's, I believe, unique to us is everybody out there to me has hey, we have a personal banker. Our team's well-rounded. But what we find is when we bring in employees from other banks and credit unions, they've been relatively siloed. So if you bring in a loan officer from a larger credit union, they're used to meeting with the member, maybe gathering information, sending that loan to a processor who sends it to an underwriter, and maybe it comes back around to the loan officer to close. What we do here is nobody's siloed. So our personal banker that you sit down and talk with, they're on the phone, they're in the phone queue. They're a loan officer that takes the loan from start to finish. They're also somebody who's here in person helping you with a small transaction too. And by doing that, everybody's cross-trained, and we really feel like we can keep that expense ratio where it needs to be and similar to some of those larger credit unions so that we can see the benefits of it like they do also.
Yeah, it sounds like, Mike, you guys have decided that rather than have multiple layers of employees with different skill sets, that your baseline is way higher. And so you need less people because you don't need a separate loan officer. Everybody's a loan officer. It's kind of like the Marine Corps where everyone's a rifleman. And everyone's a loan officer. And loans are really the heart and soul of making money in the credit union business now, aren't they?
Yes, they are.
Yes, they are. So I got to tell you one little story about when I first, cold called Mark Lau and said, "Hey, I'm with the national group and I'm with San Diego. Can I come out and see you?" And he's like, "Yeah, sure, why not? What the heck, And so we hit it off right away. He is such a great guy, and I was talking to him about the expenses and that sort of stuff. I said, "How do you guys do it?" He goes, "Well, let me show you my IT department." So he goes to this closet and he opens it up and points to a couple of routers up there and goes, "There's my IT department. How do you like it?"
Yep.
And I said, "Oh, that's a good idea." But there's one other thing you talked about at San Diego when we have a new, back office vendor, credit union service organization thing to work. We often bid it out like cities do for jobs, and we often end up with different vendors for different things. And I really like what I was hearing from you about using Fiserv for all of your multiple things related to many things. So you rather than have multiple vendors, and when you have multiple vendors, what I've learned from my 20 years being on the board, they often don't get along together well in terms of how their data and systems work together. Whereas if you're all in the same house, I bet you it all works really well. And if it doesn't, you call them up and say, "Hey, your stuff's not working. Could you fix it?"
Yeah, no, I think you're right on, Michael. And one thing Fiserv's done to enhance that relationship is their service platform now encompasses everything they do. So just like you were saying, whether it's them hosting our website or they host our loan operating system, we jump on one single point, put in a ticket at that one point and go from there. It's worked well for us.
Oh, wow. But the other thing I've noticed too, rather than being a firefighter credit union, you're a firefighter private bank and you have private bankers.
Mhm.
Very different approach. I like it.
Yeah, and that really came from our membership. One of the things we found, wow, probably starting back in about 2013, is our members kept coming in, calling us a bank. And so we started talking to them, and what we heard from them was, no, we like this place because it's a private bank.
Huh?
And so we started within the realms of what we could do, really referring to ourselves as a bank, referring to our team members as private bankers, and it's just connected well with the membership that we have.
Okay. Well, I think, one of the big things that's happening in credit union world is everybody's assets are growing. Their shares are growing strongly. And with interest rates not predicted to be risen by the Fed until 2023, this is a tough environment because, as you mentioned, you have an expense ratio, then you have the cost of funds, add those two together, and your investment portfolio better exceed that, or you're going to be, kind of going the wrong way. So, how are you guys managing that asset growth, and how are you keeping the loans alive?
Well, I'd love to sit here and tell you we're managing asset growth, but it's coming at us like it's coming out of a fire hose. Okay. I'm
I
sure
hear
like
you.
you guys, right? So not as much managing that. I'll start with some of our investment strategies. We have done a few things differently starting this year, especially with this significant growth. The first is we're participating in dollar roll transactions for the first time. And we're
Say that
doing,
again. What did you say?
I'm sorry.
Canadian dollar transactions?
Oh, no, dollar roll
Right.
transactions. Yeah. So, and we're doing that just like everybody else because we are trying to find those extra additional basis points that we can
Mhm.
squeeze out in this environment. And that's worked well for us. We had researched that several years back when there was a small window for dollar rolls and that closed. And so we were much more prepared this time around to really jump in and take advantage of that. Another thing we've done is we've really researched pre-funding options, like I'm sure everybody else has too. And we've actually moved into some, cautiously, I should say, moved into some pre-funding programs. And we're finding that it gives us more diversified income options. And that's providing us with some better margins. And both of those we haven't done in years past. I know Bernie in the last rapid fire session talked about participation pools. Even though we're a small credit union, we've actually been purchasing participation pools for over 7 years now. And we purchase mortgage pools and commercial real estate pools, and we're about ready to close on another one this month. And those, again, if you know what you're doing and you cautiously move into it and it fits your success model, have really provided us with better margins. The pool we're purchasing now, based on all of our calculations, of course, none of us know what prepayment speeds are going to look like over the next few years, but we look to net over 3% on that pool.
Wow.
And 7 years of doing participation pools, we've never had a loss yet. So we feel like that's a strength of ours, and we're going to continue down that road, especially in this environment.
So these participation pools, because we've invested in a couple of them in San Diego, and in most cases we've known, the originator of it, either another firefighter credit union or something like that. So is that true with you guys too, or is this you going to your broker and finding things?
A little bit of everything. We've done some with exclusive firefighter credit unions. We've done several through a broker. This one we're closing right now actually came up when our CFO and the CFO of a local credit union here in Denver that we know well were having dinner. So we're getting it from everywhere.
All right. So, and it's great to hear you guys haven't had any losses on any of those.
Yeah, I'll be honest with you, going back to that safety and soundness,
Sure.
we have a very thorough, very tight due diligence process when we purchase those. And it's even outlined very significantly in our policy. So when we go out to an entity that doesn't know us well, one of the first things we'll tell them is we have a very precise process and we are very picky with the loans. We typically, when we get that first pool from a seller, will throw out over a third of the loans. even
Okay.
before we see the loan files. And then we go back and back and forth and work on getting a pool that we're happy with. Now, years ago, that was fine because there were less institutions out there trying to find participation pools. Now, we could see some other entities walk away, but we believe that process that we put in place, as strict as it is, has really helped us. I think we've even had one delinquency in all of these years also that didn't hit 70 days. So.
Oh, wow. Now, how are you doing with consumer loans with your members for cars and all that sort of stuff?
Sure, like everybody else, struggling to find those. Again, I'll tie back in a little bit to what Bernie had talked about, doing a 1.99 promotion where they give a point back to their members. We in 2017 realized that we can't compete in the indirect market well at all. We don't trust dealerships to really determine whether a member can be a member of ours. And two, we don't have staff at night and on the weekends. So what we started doing is we started educating our members, go out, find the vehicle you like at the dealership you like, and let them try to push you to whatever financial partner they have. We told them, look at all the golf pictures behind the finance guy, and that'll tell you what credit union's buying all their loans. We said, do that. And we created a simple one-page form, and we said, call us. We'll fill out this form with you. We'll have you sign it, and we'll do all the legwork. So for 3 years now, we bring everybody's loans that they finance somewhere else back here. We give them $195. And then we also ensure that we will beat their rate by a quarter point down to 1.99%. And we recently, and I hope everybody's doing this, we started looking at the margins we can get out in the investment forum. And we said, man, we should just tell all our members, if they credit qualify, we'll just give them an auto loan at 1.99% because it's better than what we're going to do anywhere else for, that typical 24 to 32 month period of an auto loan. So we shot that out to our members, and we've done just over 4.8 million in auto loans the last 2 months. So that's worked well for us.
Oh, very nice.
Yeah.
That's very nice. Wow. I know Mark Lau, one of the programs he told me about, which I thought was another genius move you guys made a few years ago, was it was a mortgage one. And it was basically, call us. We can tell us how much you want to drop your mortgage and we'll make it happen for you. And I mean, it was just kind of that whole personal private banking sort of thing. It was kind of like, yeah, okay, we'll do. I'm sure you extended the term and, gave them a lower monthly payment, give them a raise.
Well, yeah, and this is where we have to give a shout out to NCOFCU. Mark and our volunteer leadership team actually heard that at a conference from Spokane Firefighters.
Oh, is that right?
And being this collaboration that we are, Spokane sent us all of their marketing materials, all of their policies for it. It's our RPM, our rapid payoff mortgage product. And we went from having about 7 million in mortgages. I won't count this year because we've all exploded in mortgages this year. Yeah. But we went from about 7 million before we implemented that program to, at the end of last year, over 28 million in direct mortgages because of that. And that's worked great. And the key behind that, what we found is we have a fixed low closing cost. So if you do a 15-year RPM with us, it's $695. Whether your house is $300,000 or $700,000. And our membership, we stopped marketing it because the members are going to the firehouses and doing that marketing for us.
Oh, okay. Oh, beautiful. So it sounds like you got a lot of things going on there. What do you see in the future for you investment wise as we continue to be in this low interest rate environment?
Well, I was hoping you'd tell me. So
remember, I'm one of the volunteers, not one of the smart CEOs.
Oh, geez. We're going to continue with dollar rolls as long as those make sense for us because they're doing really well. As I said earlier, we'll continue with participation pools because we feel like we have that knowledge and expertise there. There's a ton of talk about derivatives right now. That gets to a point of what expertise you have in-house or don't have in-house. We have a very strong relationship with ALM First. We're educating ourselves significantly on derivatives because they will do a good job hedging against the asset portion of our balance sheet that's heavily weighted in mortgages now. And so those are things we're really looking at in the future. But again, derivatives are something we really feel we have to educate ourselves more on, even with ALM First's help before we jump into that. But I think the opportunity those provide to hedge against what we have such a strongly weighted mortgage side of our balance sheet, I think that's really going to help us.
Oh, wow. I think that's a really good idea, because certainly I know that's one of the things our board worries about, is having those long-term loans at, really low interest rates, and how to manage that sort of thing. I know you also are just engaging with the credit union first responder organization, and maybe you can say a little bit about that, about why you're going there and what you hope to achieve by partnering up with that.
Yeah, sure. So where we first reached out to QFER is what we call it here.
Yeah.
Is, and maybe many of you have saw this too. This was another, in my opinion, thing that the pandemic actually helped us grow. So we had members coming to us asking if we were going to participate in the PPP loan process, the SBA process. And at first we said no, we weren't an SBA lender. We didn't have much experience in that realm. But members kept coming back to us saying that large financial institutions, specifically banks, would not allow them as a small borrower to even apply. And a good example is we had a member that was a member of Chase that had their business savings account there and their credit card there. And Chase came back to him and said, unless you had a checking account with us on February 13th, you cannot apply for a PPP loan. So I had remembered some discussions about QFER, and I reached out to Grant and to QFER and said, can you guys help with this? And I got to be honest, I'm a big fan. Sorry, everybody, but they have been lifesavers for us, especially Trish over there. They, if I remember right, went from a first call to having us up and going within 3 days once we were approved by SBA.
Wow.
We were able to do, at our size, not a significant amount of PPP loans, but what it led to is every PPP loan we did, those members, if they had accounts elsewhere where they were denied, brought everything to us. And actually, since then, we've booked 2 commercial real estate deals with 2 of our business members that never knew we could work with them on either an SBA loan or just a regular commercial loan. And QFER, the thing we liked is, again, with 13 employees, guess what? And a lot of you know this, I was our PPP expert, right? So having your CEO trying to do all your PPP loans directly with your members can hurt you strategically. And what we had with QFER was it fit our business model perfectly. All I needed to do is talk with the member, answer some questions they may have, and then give them the portal to where they could download everything or upload everything to QFER, and QFER took care of the entire process, member communications, everything else. I got to tell you too, there was a night, if you all remember, when that SBA portal, none of us could get in or push anything through because larger institutions were doing it automatically. They were on the phone with me at 10:45 at night as we're both working to try to push our PPP applications into that portal. That first time we were all worried that we'd run out of money, right? So nothing but good things to say about that program and about them. And we will continue to look to grow our relationship with them. And it's really helped us as far as our business accounts go.
Oh, wow. That's impressive. That's impressive. So let's switch to data security and all that sort of thing, the hacks and all that. So now that you've outsourced everything, how I assume it might be working better because the expertise is greater with your vendors.
Yeah, I think you hit it right on the head, Michael. Is Fiserv's a Fortune 500 company, and they take care of all of our firewall services, and we feel that without a Fiserv, we likely would not be able to afford the quality and really the expertise that they bring. It is something that concerns us, just like it concerns all of you. We have a very robust cybersecurity policy, and part of the group we work with cybersecurity wise is we attend all of their webinars once a month. We're constantly making changes with the firewall team or with how we conduct business to hopefully limit the potential of any type of attack. And we've really spent a lot of time on ransomware lately also,
Yeah.
because small little things, Michael, like we're finding out that ransomware hits your system and it's on there for 90 days while they're looking around in all of your files before they even reach out to you. And things they're looking for is, did you scan and save your insurance documents that tell them how much coverage you have for
Oh,
ransomware? And then they know how much to
ask
try to
for.
get you for. So a lot of that and a lot of concerns going from, we were well prepared to have people work remote. We had the technology and the connectivity already. But again, I'm sure you all went through this too. A big concern is we know how secure we are here, but when somebody's at home, they're using their internet. And how secure is that? And so we found that CUNA Mutual did a really great job helping us build very explicit details as to how much somebody at home, their network needs to be protected. But yeah, you know, I think it's a concern for all of us, and it's one that Fiserv works really well with us on.
Yeah, I think certainly that's one of those things. You can never let your guard down. You can never let yourself get, outdated, because boy, it's huge when it happens.
Yeah,
So
agreed.
that's something we're all worried about. What else are you worried about today?
I put some notes. You said that you might ask me that, and I said, "Wow, what am I worried about?" Looking at a note because I said, oh, "Geez." I really thought about it a lot, and as an industry, I believe I'm worried about our industry reaching for yield and ignoring whatever conservative models they have in place right now as they're out there searching for spread. You mentioned it. It was something I even put down when I was putting some notes together. When you're running an expense ratio at 3.5, you're churning mortgages at 3, and your cost of funds is 60 basis points. We can't do that forever.
Oh.
And so I really worry for the institutions in our industry that to me, even more difficult because we're coming off banner years, right? I mean, you can go out and look at our financials. We're going from making $1.4 million a year to now 800,000 this year to now next year, we're saying, okay, can we get to $250,000?
Mhm.
And those are sacrifices that we have to make on the expense side of things, especially to ensure that long term, when that margin just continues to get snuffed out, that we can make it. So I'm worried that people may not be prepared for continuing to operate conservatively for an extended period of time.
Yeah, I think this is one of those periods of time where having really strong capital, double-digit capital, pays dividends, because it gives you that room to kind of hang in there, basically.
Agreed.
Yeah. So where do you see opportunity going forward? I mean, you guys are kind of the people that find opportunity where other people would be, having lemons.
I'll tell you, that was something we discussed. And while I may not be able to give you something that I know for certain, I am certain there's opportunity everywhere, and I go back to the PPP loan opportunities we talked about earlier. We never thought we'd be an SBA approved lender, and look what happened. I go back to large credit unions. We had a member bring over 8 accounts, and he brought them over because a large credit union here in town, they closed down their branch to some extent. And then they had you park in the parking lot, and you had to sit in your car, and you had to give them an ID. And then when you gave them the ID, you had to pull your mask down so they were sure it was you. And there's nothing wrong with that. They're protecting their employees and their members. But there were opportunities like that where that member came to us and said, I just walked into your branch, asked to see the CEO. You came up and talked to me, and this is the relationship I want. And so I think when times are uncertain, most organizations are going to pull back, and they're either going to pull back for financial reasons or pull back because they're not certain of what's coming in the future. And I think that's when we as credit unions can jump in, as long as that equation, that a success equation, is prosperous for us. So what we're doing right now, quite honestly, is we're sitting there saying, spend more time and attention than ever listening to our members.
Mhm.
Let's find out what they're saying they're not liking out there, and then let's go out and see if we can get it. because I really do believe that we're going to see businesses and competitors, most importantly, pulling back services offered, pulling back, everybody with tight margins is going to start cutting expenses. And so when our competitors have less people on the phone to help a member when that technology fails, right? Because we all love technology, but when it fails and you call into your credit union and they can't fix it for you, that's probably more upsetting than just about anything else. Yeah. And so we're really looking at expanding what we can provide and what we can do so that when those opportunities come, we need to make sure that we can tell our members, hey, don't be discouraged by this. Come to us and we'll take care of you.
Yeah, I'm kind of curious, Mike, because what I've heard from you throughout this conversation is you guys listen to your members on a deeper level than most organizations do. And you've discovered opportunities by finding out what they need, finding out what they want, things that are driving them from other financial institutions. You guys are really doing a great job with that. And I think that's one of the reasons your numbers show in these healthiest survey of credit union sort of thing.
Yeah, we're really lucky to have a membership that is not shy about telling us what they need and especially telling us what they're not getting, right?
Yeah, that is great. Well, I'm that's all I got. Anything else you want to add to finish us off? This has been delightful, very interesting.
No, we, I appreciate being able to spend time with you and thank you for thinking of our credit union. We really enjoy what you're doing and really enjoy being able to tell our story a little too, to be quite honest with you. Yes, so thank you.
Well, I look forward to seeing you in person. As you know, we have family in Denver. I get there and I promise to take you to your favorite microbrewery.
That sounds perfect. I look forward to seeing you too.
All right. Thanks a lot, Mike. You take care.
Take care, Michael. Bye.
Bye-bye.